moment. So we are live. You're watching Interchain FM, a technical podcast about all things blockchain interoperability, DeFi, and NFTs. If you're seeking alpha in the cosmos, look no further. I'm your host, Chjango Unchained. Today we are here with Circle, the company that's behind USDC. And USDC, as you know, is the second most liquid centralized stablecoin for the entire cryptosphere. And I'm honored and excited to have Joao Reginado, I hope I pronounced that right, who's the VP
That's
of
right.
product at Circle. Okay, great. So Joao leads the product initiatives. So we're going to cover all of the basics from top to bottom of the Cosmos ecosystem, as well as the basics of USDC and how that stablecoin fits into the broader Cosmos narrative. Welcome, Joao.
Thank you. Thank you for having me, Chjango. Excited to be here.
Is there any part of your intro that I missed that you would like to flesh out a little bit more?
Yeah, maybe let me just share a little bit of background. I have been in crypto for many years. Have been bitten by the crypto bug all the way back in 2012. I worked for Circle since 2015, so over 7 years now. And I led the build out of USDC for Circle starting in 2017, 18, circa that time. And since working on USDC, I have always been involved with the topic of stablecoins then at Circle. And as you said, today I lead all the product teams that we have that work on building our stablecoins, expanding them internationally, expanding them across chains, building better infrastructure because we see them as really protocols for fiat money. So, for example, building interoperability infrastructure, the new cross-chain transfer protocol that we're working on that we can talk about. So all of those things are things that I work on at Circle these days.
That's excellent. So we want this podcast to be a comprehensive one. So we'll just start with the Cosmos stack and then move on to the basics of stablecoins. If we're talking about Cosmos, how do we define it? Cosmos is both a framework for building app chains and a network at the same time. And I understand that that's been a point of confusion for a lot of people because they say, well, Cosmos Hub, or are you talking about the network? So I would say that Cosmos is both. And for stablecoins, there's many different types of stablecoins. So we should start with the stablecoin trilemma. If you wouldn't mind explaining that, Joao, and I'm going to pull up a visual image of it so that people could follow along.
Yeah, sure. I'll wait for your picture to come up. But essentially, I think the trilemma is this idea that somebody proposed. I think it was all the way back in 2018, or perhaps even a little earlier. But I remember it being kind of something that was guiding us as we were thinking about the design of our own stablecoin solution. And as you have it on the screen there, the trilemma basically proposes that out of three core quality properties of a stablecoin, those being the peg stability or stability in general, the level of decentralization that they have, and the level of scalability or capital efficiency that they have, that you can't really optimize for all three. And that's the trilemma. You can really pick two to optimize, but you're not going to be able to do a tremendous job on all three. And it has been disputed to some extent, but I think the history has proven for that to be the case up until now. And when we were designing our own stablecoin solution, we thought at the time that something like decentralized stablecoins are super interesting, and I am personally interested in the continuous research and kind of experimentation on that front. But back in 2018, at least, it just didn't feel like there was any model or answer for all the challenges that would allow us to kind of follow that design path. So we decided to follow an off-chain centralized, collateralized, stablecoin, fully collateralized stablecoin model, which is actually very simple from a design point of view. It might be difficult to execute on, to operate on, but it's very simple. And from that perspective, the leg of the trilemma that we don't optimize for is decentralization, right? So we don't claim to be decentralized. USDC or a stablecoin like USDC has off-chain collateral, has actual fiat collateral. So if you have off-chain and fiat collateral, you have to custody that somewhere, and that custody, introduces an element of centralization. You need somebody to manage those reserves. In the case that's Circle, and if you have somebody managing that, that's another point of centralization. And usually these operations are regulated in any part of the world, right? And so you need that additional kind of oversight from a regulatory point of view, which is also a level of centralization. So there's no way you can claim that those solutions are not centralized. But the good side of optimizing for the other two sort of legs of the trilemma is that you can actually do a great job. So for example, on capital efficiency, right, USDC has been able to grow to $55 billion at its peak size a number of months ago. And it really has no upside cap, right? We can mint USDC to the extent that there is demand for minting of USDC. To the extent that customers send us dollars, we can mint that USDC. There's absolutely no ceiling to that, which is not the case with some decentralized options, right? That might have actually a cap or a ceiling in terms of how much they can keep growing. Similarly, on the peg stability side, because we managed to put in place such a liquid infrastructure, with the amount of distribution that we have worked with the ecosystems to get to. USDC, and I think we are really proud of this, USDC really has the most stable peg in the industry, and that's not an opinion, right? We have been monitoring this for years, but actually even this week, Coinbase published a report that I think was interesting, that look at things from a slightly different perspective. But if you pick, for example, just the amount of minutes that a stablecoin can maintain its peg out in the wild, right, through price discovery and all the trading venues that exist out there. If you can maintain the peg within, say, 10 bips of the dollar, and you observe how many minutes some stablecoins stay outside of that window, USDC is by far the most stable stablecoin in the world, because it has the ability to maintain that peg and to deviate from that peg only in kind of less than 1% of the scenarios, while the other larger stablecoins are more looking like 6% and 7% of the cases they actually deviate from that peg. So in whatever way you want to look at that, whether you want to look at standard deviation or any sort of metric, you will see that the peg stability of USDC is really, really strong. So we do a good job at optimizing for those two. We can't make a claim for the decentralization bit.
Right. And decentralization is an inverse function from centralized stablecoins, right? In that, as a centralized stablecoin, your overhead largely composes of legal fees and being regulatorily compliant, whereas a decentralized stablecoin does not necessarily have such a top-heavy organizational structure, and it rather optimizes for programmability in that case.
I think that's right. I think a decentralized solution has a lot more surface for experimentation on the technology side. As I said, our technology, we're really proud of our technology, but as far as real crypto, hardcore crypto technology, solutions like USDC are actually really simple, and that I think the ecosystems, they actually value that side, right? Because it just means that there's really minimum protocol risk when utilizing a centralized stablecoin like USDC. Even the code of the USDC smart contract, if you count, all the different modules, it has less than 1,000 lines of code. It's really simple. It just literally does what it says on the tin. The complexity tends to be actually off-chain, as you pointed out, right? So, for example, we operate these fiat on and off ramps, right? People send us dollars. We do automated monitoring of settlement bank accounts. We do automated minting on the back of that, the reverse process. We move funds to sort of more offline or cold, if you will, fiat reserves. They have a different quality profile. You need teams of finance analysts, accountants to manage all that. And then, as you said, on the legal and regulatory side, there's really a heavy lift because you need to report on your activity to all these regulators around the world. Whilst on the decentralized side of things, you have a lot more opportunity to implement in software the governance of a construct like that. I think it is it's also super challenging, and that's why I think in general decentralized or algo stablecoins, they have had somewhat of a cap in terms of how far they can grow. But as I said, I still think it's a super interesting space.
You're right. And just to go through the fundamentals of how a stablecoin is minted, we have to look at basically how banking works, in that on the left side, there's your cash assets, and on the right is your liabilities. So in this case, the debt instrument based on assets is USDC. And USDC's cash reserves are comprised of, and this has changed recently, right? Which is now you're holding mostly cash and US Treasury bonds. Is that correct?
That's right. We have, I think that we as an ecosystem, we have evolved in this space, right? But I think in the expectation of what likely will come out as fresh and stablecoin focused regulation, at least in the US, it sounds like cash and short-term treasuries, which are amongst probably the most liquid and the most secure kind of dollar equivalent instrument that you can have, is what composes the reserves of USDC these days. So to your point, as far as a construct, it's rather simple, as I said. So a customer sends us $1. They do that by transferring US dollars through many different rails that we support, but eventually it lands on a bank account that we what we call a settlement bank account that we have control over and that we monitor. Upon monitoring that settlement, when there is finality, if you will, on that fiat settlement, we then automatically mint USDC. Then that settlement, that dollar that customers have sent us. So when we mint USDC, as you said, that becomes a liability. It's a little bit like an IOU, right? So we give somebody a token and we say, there's a promise being established here. If you ever come back to us with that token, we promise you to give you back $1. And then with that dollar, we have, what we call investment policies that are following money transmission laws in all the states that we operate in. We are allowed to do certain things with that money. We're not allowed to do certain other things, and we actually have a pretty conservative investment policy in what you said, in basically allocating the reserves of USDC in a portion into pure cash deposits on US domiciled banking institutions, and a portion of it by acquiring short-term US treasuries with those funds.
Yeah. And if you compare this, the makeup of this cash asset to liability model to other decentralized coins, starting from more centralized to more decentralized, if you look at MakerDAO, the cash assets are going to be cryptocurrencies like blue chip ones like Ethereum and other assets. And then that allows you to mint DAI. And then on the even more decentralized side, which is what we covered with the episode we recorded with Do Kwon almost an entire year ago, which is for the algo stable asset to liability makeup. It looks like on the left side, it is a liability to liability. it's Luna to more USD. Joao, most of the people that interact with USDC are buying it in the secondary market. So in the primary market, who is doing the minting? Is that just Circle, the company? Like how is it decided how much more USDC to mint and put into the secondary market?
Yeah, great question. Yes, as of today, Circle is the only entity in the world that can mint and redeem USDC. So Circle is the only entity that operates this primary market, as you said. Back in the day when we launched in 2018, we actually had a service that supported both individuals and retail, if you will, and institutional customers. And over time, as USDC has grown, we actually realized that we didn't really have to support individual consumers, because it's very hard to support those two different types of customers and do a good job at both. And we felt that with the partnership that we had with Coinbase, for example, they did a great job supporting retail consumers, and there were many venues around the world where consumers could get access to USDC. So at some point in our journey, we actually changed our service to only support institutional customers. So so there's almost like the idea of a wholesale and retail distribution in a model like USDC, right? So we operate this primary market, and this primary market is wholesale only. So what I mean by that is that institutions come to Circle, and they usually come to Circle with very large ticket sizes for minting and redemption of USDC, right? So we have done minting of literally hundreds of millions of dollars, or redemptions of hundreds of millions of dollars at a time, in one single transaction. Typically, you're talking about tens of millions of dollars on a per issuance or redemption basis. So these institutional customers, they are very different in the type of activity that they perform, but some of the most active ones are companies that operate in market making or electronic trading kind of spaces, right? So these are companies that actually have as a business, providing liquidity in different venues, particularly trading venues. So they could be companies that are making markets on centralized exchanges. They could be companies that operate as a distributor for a different customer base. For example, Coinbase, right? So Coinbase comes to Circle, mints and redeems USDC to distribute to the retail demand that they have on their exchange. And like Coinbase, we have relationships with a lot of our venues like that in the world. But usually there's that difference between that primary market, which is what you referred to, and then the secondary market, which tends to be the best ones tend to be the centralized exchanges that have some access to fiat on and off ramps, right? Where retail consumers can deposit dollars with their own bank account over there and acquire USDC in that way.
Got it. And now that we've covered the fundamentals, let's lean into how USDC fits into the broader narrative of the Cosmos ecosystem. So I want to emphasize how momentous this is, because if you look at the makeup of the Cosmos ecosystem, Osmosis, the Cosmos DEX, makes up over 90% of all IBC transactions, and stablecoin pair transactions make up about a third of Osmosis volumes. It was a lot higher than that during the bull market with UST, but ever since the bear market, that's about the estimate. And all of the blue chip currencies are currently being imported through the Axelar bridge. So most of that volume is bridged USDC. Some DAI, some WETH and WBTC through Axelar. And this tells us that the Cosmos ecosystem is a net importer of money. Like, we don't have a native interchain money. So the idea of Photon, we had a project called Photon initially. Jaquan actually proposed that, and Photon was meant to be the money for the Cosmos ecosystem. But for one reason or another, it didn't necessarily happen. And so right now, with the bridge hacks, so we have a lot of bridge hacks, right? That being said, if everything in the 5-year timeline moves to IBC, being IBC enabled, then that removes the need for bridges, which is where we're trying to go. And if we have a native cryptocurrency or native stablecoin in the interchain, then that completely removes the need for all bridges, and the majority of these transactions could just be IBC transferred. So the fact that USDC is coming into the interchain and you're seeing this multi-chain vision play out, that means that Circle is planting itself as the first native, truly multi-chain stablecoin. Is that a fair assessment?
Yeah, I think that is definitely something that we think about. That is definitely along the lines of the future that we imagine. We think about ourselves and what we're doing as building protocols for fiat money, right? So we always have had this vision, even before USDC, that that there was going to be ways for like money to exist on these blockchains, and eventually like all the mainstream use cases that people have for money would eventually migrate over, right? I think naturally over time we realized that maybe with and we were very Bitcoin centric back in the day, as most people were. We realized, well, there are things that you need to improve on, or there are capabilities that you need that are not quite there, and so that's how we ended up landing on the idea of stablecoins. But definitely the idea was always that this should behave more like a protocol, so that people can build all these use cases on top of like standard ways of functioning for these forms of money. So we always said, even before building the first version of USDC, which was on Ethereum, we always discussed how eventually we would get to a world where USDC would behave more as a protocol that would be agnostic to chain, and that would actually work across a number of different layer ones and layer twos, because we thought that that was going to be the world we were going to live in. And I think now, 4 or 5 years later, it's really proving to be the case. And when that was more evident, that was the case, and I think that happened maybe about 2 years ago, we started investing a lot more on bringing USDC to different ecosystems. Our story with Cosmos is actually very lengthy and super interesting. We have been talking to so many teams in the Cosmos ecosystem, and have been trying to create our own point of view for how to bring USDC to the Cosmos ecosystem, and that has taken well over a year on our side. And if it was even before UST had that massive growth that it had, that you referred to. And we were thinking about several different ways of doing that. Should we bring it to this application chain or the other? Should we have our own USDC chain? Should we have a neutral point of entry? And we played with several different approaches until earlier this year, when I think, again, talking to many folks that are builders on the Cosmos ecosystem, I think we ended up getting to a design model, getting to a model that would satisfy, I think, all of our requirements, and hopefully all of the requirements of the ecosystem as well. But to your point, I think it is super important for Cosmos to have a native stablecoin, right? That can be connected to that primary market, as you said, so that there is a wholesale way for very large participants to convert very large sums of dollars directly into USDC on Cosmos. Also, we have a good relationship with a lot of sort of on and off ramp players, right? For example, Cato is a company that Circle has invested in through Circle Ventures, and they have like a great UX for fiat on and off ramps. They have supported UST throughout the boom, and they support USDC and like what we do as well, but they don't have the ability to deliver like native USDC directly based on fiat interchange, for those customers that desire that. And then one last point, even on the Axelar flow that you mentioned, right? I think there are certain downsides to bridging assets like a stablecoin like USDC, which has this off-chain collateral, and it can be potentially moved between blockchains in a more optimized way, because you can literally destroy them at source and recreate them at destination, because the collateral is untouched, is intact. And so we're also working with Axelar, and I think once the native version of USDC exists in Cosmos, Axelar will be able to port their solution to this way as well, and you will have this very strong, very liquid, hopefully, version of the dollar that can work on the ecosystem.
Right, and ideally, the user flow looks something like between 5 steps bridging to other ecosystems, and finally landing in Cosmos, to reducing to maybe 2 steps. You go through the Cato on-ramp and then swap into USDC, and then from there you could just trade natively across the Cosmos ecosystem, send it to Osmosis, do whatever you want with it. So Going back to the model that you ultimately converged on, that you felt hit all the boxes that you guys were looking for, the interchain security model with the hub allows USDC to import the security to that of Gaia, Cosmos Hub, and then launching the token on a generalized asset issuance chain. Can you talk more about why that model made sense to you out of all of the other options that you looked at?
Yeah, happy to. One thing that's always very important for us is an element of neutrality. So we see ourselves as a protocol for dollars on the internet. So by definition, that has to be a neutral piece of infrastructure, right, of market infrastructure. So Cosmos is a very, very interesting ecosystem. I think one of the most interesting ecosystems out there. But it has this idea of the sovereign chains, and the sovereign chains, they have a purpose, right? They are application specific. They want to attain a particular goal. There is freedom for them to compete with each other, right? So there might be two sovereign chains or application specific chains that have the same goal, that have the same target market, and therefore they're going to compete. And that's exactly how the ecosystem should behave. So we felt that using an application specific chain to issue USDC natively on was not going to give us the best neutrality profile. So we were always very reluctant, even though we investigated with a lot of the teams around the application specific chains. We were reluctant in terms of, is this going to be limiting in that it might make that ecosystem, that application specific chain, super successful, but will the other, the rest of the ecosystem see that in the best light? And so we were looking for a neutral alternative as much as possible. But also the problem then that we have that was a requirement is just from a risk management point of view. We now operate an asset that is $40+ billion in size. It lives in multiple ecosystems. So in a way, it is as weak as the weakest of the ecosystems, and we have to be careful with the risks that we manage now on an ecosystem by ecosystem basis. Especially because it's such a liquid and bridged asset these days, that we might be more vulnerable than certain other assets to like a particular risk on one ecosystem, and that becoming more of a systemic event. So security was extremely important for us. So when we put these two requirements together, the fact that we wanted to be neutral, and neutral sometimes means maybe not necessarily the largest chain, on the ecosystem, but also security is so important to us. In discussing with a number of different teams in Cosmos, eventually we landed on this as an answer. From a neutrality point of view, an asset issuance chain, right, that has that as a goal, right? The goal for that chain is to be like a landing port for the issuance of several crypto assets. That sounds like it's neutral enough from an objective point of view. And potentially, this outcome that I think we're aiming for of leveraging interchain security will give us then, a great profile from a security standpoint. So it feels like with that solution, we would take the two biggest boxes or requirements that we had, and that's why we are exploring that avenue.
Mm-hmm. Are you saying that the property that the Cosmos Hub has is credible neutrality, but only by virtue of the hub not actually having its own application, right? Because the hub was just staking for a very long time, and it's not until next year when its app-specific application is interchain security, effectively.
Yeah, but even that, I think it's neutral enough, right? I guess what I'm getting to with applications that might not be as neutral, I'm particularly talking about things like, trading applications or exchange applications, whether they are spot or derivative, it doesn't matter. But those things are things that, there are different approaches to implementing that. And you mentioned like Osmosis is doing a tremendous job, right? Not only in Cosmos is like one of the most relevant venues these days, like across most blockchains. But there is an opportunity for competition there, right? And there should be other builders eventually attempting to do the same. And so we always felt that, in the future, when you and we have to consider like all possibilities. That might not be the most neutral like answer, for example. So that's that's a concern. And I know, it wasn't an option that pleased everybody. But unfortunately, we have to pick an option that works for us.
So in the 3-year to 5-year mark, when assuming the Cosmos ecosystem has achieved some semblance of mesh security, and I could define that in a little bit, but what I'm saying is, let's say app chains are just cross-staking with each other at scale, so that security is no longer sort of a token-specific property. So it's no longer a choice between Atom versus Osmo versus Juno. It's more like every token is overlapping with other tokens, and the aggregate amount of security is greater than as a whole than the single instance. So is there a world where USDC looks upon individual Cosmos app chains as layer ones in the way that you looked upon Ethereum and Avalanche and Polygon as individual L1s that you would need to create outposts in, because you're in Cosmos ecosystem and it's relatively risk-free and low cost to deploy on just multiple Cosmos app chains. Is that a possibility?
I think it is. I think we have been thinking about that. We have been thinking about how those different scenarios can play out in the future. As I said, interoperability is really important for us, and the tricky thing with interoperability is that the choices that you make in the past, you have to live with them. And we have experimented doing things like like attempting to issue like a native version of USDC on a chain that had bridged USDC to a tremendous scale already. Avalanche was a good example. When we issued native USDC there was over 1 billion, I think, bridged USDC over there. And so we had to engage with the ecosystem and think about ways to kind of get everybody back into the best user experience, which would be the native experience then. And it is doable. So even though you have to live over a period of time with these past choices, there's always a possibility, I think, in crypto to kind of do a good job at making these transitions. So I think, our initial bet is that we will have this asset issuance chain. We will issue USDC natively there as a landing port first, and then from there it can navigate to the remainder of the ecosystem via IBC. Does that block us from, natively issuing, as you said, considering another chain as a layer one and having also a native version of USDC there in the future? No, I don't think so. I think it is a possibility, and we think about that, and we think about what is that going to mean for the interoperability of USDC in the broader Cosmos ecosystem. But I think it is potentially a scenario that we see out in the future.
Mm-hmm. So because Circle is borrowing security from Atom stakers, is it that Atom stakers are going to be earning fees in USDC, kind of yield farming the asset issuance chain?
I don't know yet. I don't know if I can share enough details, and it's literally not because I don't want to share, but it's because I think there's still some discussion,
some design decisions to be made. That's still
exactly.
Mm-hmm. Okay, got it. You talked about Circle's native deployment on Avalanche, and obviously you've seen growth from that. What kind of growth do you extrapolate can happen in the Cosmos ecosystem based on the demand that you're seeing on Osmosis?
Yeah. I think as I said, like some of the larger customers that we serve on the issuance and redemption side of our service are really these very, very large scale market making or electronic trading firms, right? And I think a lot of people don't understand like that sector of the market and how super well developed it is in crypto, because crypto is all is all programmable. So actually market making and electronic trading in crypto is like super automated and super efficient. But the more steps you can remove for those actors, to your previous point, in terms of allowing them to go, eventually their goal is, right, if there is like a trading opportunity, an arbitration opportunity, or a liquidity opportunity in a particular venue, how can I supply for that demand, right? And if there is demand for USDC because of those opportunities, how can these actors supply USDC when it's demanded over there? And most of the time, they might be able to move USDC from other places in the ecosystem where they might be also operating on. But sometimes this is just net new demand. And so you literally have to be able to support people to go from dollars on a bank account all the way to USDC on that venue. So as you said, as an example on Osmosis, right? So what we have seen with Avalanche and with some of the other chains that we have issued on is the moment you establish that direct, I don't want to overload the term bridge, but that direct path between dollars on a bank account and say USDC natively on Cosmos in some flavor, so that people don't have to go, bank account to USDC on another chain, and then from that chain to bridge it over, and then eventually to the opportunity that they want to supply for. That just accelerates. It's like a flywheel effect that accelerates the development of these opportunities immensely. So we have seen that with Avalanche. That's actually a great example. Like the second that we issued native USDC over there, all of a sudden, many of our customers, many of these electronic trading or market making firms were minting USDC directly into Avalanche and exercising opportunities over there. And that we have seen that on Solana, we have seen that in several other implementations, and we expect exactly that to be the case in Cosmos as well.
Right. So are you saying that the tremendous growth in those ecosystems was largely due to one of the biggest stable coins issuing a native asset in their ecosystem?
I think that was a factor, but as you mentioned, like I will be remiss if I don't mention that we were also on a bull market for most of that time, right? So I think that also that was helpful, right? Because there was a continued kind of path of growth. But yes, I think the issuance of a stablecoin was definitely a factor for the growth of those venues. To talk about Solana a little bit, right? Solana, when it launched, it already had or they were pretty much ready to launch or launched very quickly after, like some of these DEXs and lending and borrowing venues, and they all required USDC. So the fact that there was that direct bridge between dollars and USDC on those venues was extremely relevant for people not to hit a cap and not be able to grow to the demand. So in as far as there is customer demand, and I think there is a level of reprimanded customer demand in some parts of the Cosmos ecosystem, at least on the dollar to demand side, we will have like a much more streamlined path, and I think that is going to be super powerful for the ecosystem.
Yeah, the fact that USDC has potentially unbounded growth and is so liquid and capital efficient makes it a powerful DeFi primitive that complements all of the available products available in any ecosystem suite of DeFi products. So I would say that it's just a catalyst or supernova that causes an explosion for whatever ecosystem that you're natively supporting. So
I think that's true.
Yeah, that being said, where do you see Circle going in the next 3 to 5 years? I could speak to where Cosmos is going in the next 3 to 5 years, but I would love to hear from you about Circle.
Yeah, so as I said, we see ourselves as a platform company, right? So we see ourselves as builders of these protocols for fiat money. So I think we have done a lot of the foundational work over the last 4 years, but there's so much more that we can do, particularly in how we serve developers and how we serve builders, right? So we are always interested in thinking precisely as you said in being a catalyst, right? So if there are builders across several ecosystems, how can we make their lives easier so that they have like dollar, or broadly speaking, and particularly because you asked about the future, but also in the future, euro protocols on chain, right? And pound token protocols on chain, and so on and so forth. We think that this concept, as it expands to more mainstream, utility or use cases, like it will demand other fiat currencies that crypto necessarily has in demand, because crypto is so dollar denominated. So part of what we do is just think about everything as a protocol, and really making sure that the quality properties of the protocols that we have are being delivered on, right? So the vision that we have is being delivered on. And there are so many things that we need to deliver on yet that we haven't even started, right? So for example, we think about the instruments that we issue as behaving like digital cash in many ways, but cash has great privacy properties that stablecoins don't have today, right? So if I send some USDC, hopefully soon I'll be able to send some USDC on Cosmos to you. That's not going to be a private operation, right? And that prevents certain use cases from being developed, right? Because if you want really broad like merchant adoption or payments and settlement adoption, like people will soon demand like a level of privacy that we don't have. So delivering, for example, privacy is something that we see ourselves doing over the next 2 to 3 years. But also other quality properties of protocols for money, and we think a lot about that. Interoperability is really one thing that we have been focusing for the last while on. As I said, because we are minters of USDC, we have this ability to destroy and create USDC on chain in a way that other entities can't, and we think that delivers like a better experience for interoperability. So we're working with Axelar, we're working with other companies in that interoperability sector to make sure that USDC is the most interoperable stablecoin in the world, and that's an investment that we will continue for the next number of years as well. But then the final thing I will mention is that, as I said, we see this as potentially becoming a network of currencies, right? We have started our journey with USDC, which, as I said, dollar markets are so important in crypto. We have launched Eurocoin in the summer now, so potentially very soon we could see Eurocoin as well in an ecosystem like Cosmos, and you should expect us to issue more of those instruments. But we also see ourselves interested in partnering with other companies that are also issuing those instruments, because honestly, we are not going to issue 200 different currencies. We're going to focus on a few for a few particular use cases, and then we see ourselves welcoming other issuers who are also operating in similar products, and creating a network of these instruments that can have hopefully the same behaviors, the same features or qualities across all of these ecosystems. So those are some of the things that we're going to focus over the next 2 or 3 years for sure.
Right. We do have a native euro coin that's currently in Cosmos, but they're certainly less well capitalized than Circle by orders of magnitude. So perhaps it's that you guys could provide an offering that's maybe a more liquid product. But the realization with Ion DAO on Osmosis is that you could use any asset to collateralize any stablecoin and peg it to any level that you want. So for Circle to offer a euro pegged stablecoin, nothing would necessarily change in the makeup of your asset list, right? Or your asset treasury.
Well, we follow a particular design path. I understand what you mean, but we follow a particular design path, which is every currency that we issue, the composition of reserves has to be the actual fiat currency equivalent, right? So for our Eurocoin product, we actually hold euros on reserves, and right now, it's actually only cash-based euros. In the future, it might change as it has changed for USDC. But the reserves, they're always composed by the fiat equivalent of that asset. But it's interesting what you mentioned, Chjango, because we actually are very welcoming of like the innovation that also happens on top of us, right? So what happened with like DAI, and I know it's controversial at this particular point in time with the maker community, but USDC, responds for a large portion of the backing of DAI, right? And there are benefits for DAI in terms of stability from being able to be partially backed by USDC. Similarly for Frax, right? They also follow a similar model. So I would love to see that kind of innovation on Cosmos as well, right? I would love to see that sort of more decentralized and algo stablecoin that can be built on over collateralization, where part of the collateral is the native USDC that we issue over there. I think that becomes like a super interesting instrument. It has different quality properties from USDC, but we are symbiotic. We support them. They help us grow, and I think we are interested in those constructs as well.
Mm-hmm. I want to ask two final questions. So USDC is the only stablecoin that did not depeg, not to a significant degree, compared to Tether, compared to other stablecoins, particularly USD and DAI. So, and one can't help but look at your US or Circle's investor makeup. One of which is BlackRock. So, does that have any sway in the capitalization of Circle? How much control does BlackRock have over USDC?
No, yeah, let's clarify that because I don't think it actually has to do with that at all. I think the reason why we have a strong peg is because first of all we have evidence, right, that USDC is fully collateralized. So we publish those attestations on a monthly basis, and we are audited on an annual basis. And now we are going even to large extents of publishing, the individual QSIPs of every U.S. Treasury that we hold, right? So that's really so that the ecosystem understands that there's no question to be asked about like how fully collateralized USDC is. So the question then becomes, if it is fully collateralized, and if there is demand for redemption, then literally you just gotta allow the redemptions to happen, right? We don't charge anything for redemptions. So to begin with, people have no question, no second thought in redeeming USDC because they don't think, oh, but it might be very expensive for me to redeem that thing right now because I'm paying, such and such fee. That's not the case for every fiat stablecoin. It is the case for USDC. You bring $10 million worth of USDC, you get $10 million. You don't get $10 million minus fees. But also, this is something that from a technology point of view, we're very proud of. We have, as I said, we have optimized our systems. You can redeem millions of dollars of USDC at 8 o'clock on a Saturday, at 8 o'clock in the evening on a Saturday. We have rails that operate on a 24/7 because we specifically built integration with some banks to be able to have that answer. And that is used a lot by these wholesale customers that we have, as I said. And also our issuance and redemption systems are fully automated. There's no John Doe, like broadcasting transactions to mint and redeem these assets. Like this is fully done by systems. And as I said, the second that fiat settles on a bank account, our systems monitor that. They tell another system that, there needs to be USDC minted and the USDC gets sent somewhere. So I think actually that construct is very important for liquidity and for maintaining the peg, because really your ability to maintain the peg has to do with your ability to supply for the demand that the market is telling you, whether it's on the up or on the down, right? Where it's in terms of issuance or in terms of redemption. It doesn't matter which side the pressure is coming from. You just have to be able to supply, because the second you don't supply on that, that's where people start saying, they start trying to jump the queue, right? So they start saying, oh, but I really, really need to redeem that now. So maybe I'm going to pay a little bit more for redemption. And that's how the price starts deviating out in the wild. To your point on BlackRock is a very recent investor in Circle, right? Only in the last round, BlackRock has joined. And obviously BlackRock is a tremendous investor. It brings so much to the table, but in practical terms, beyond the investment, the main thing that BlackRock contributes to in our construct today is that they are the venue that we use for the purchase and management of those U.S. Treasuries, and that we have in terms of the reserve of USDC. There's really no bigger role that they play other than that.
Is there in some way some regulatory benefit to having BlackRock at the table?
There's always the benefit of having those brands associated with what we do, right? And I think Circle definitely always tries to partner with the best of the best in everything that we do. So if it comes to the banking partnerships that we need to run USDC, we will attempt to have the best banking partners in the world. If it has to do with the best um, brokers for treasuries, we will attempt to work with the best. If it has to do with the companies that can manage our reserves, we will attempt to work with the best, as we work with Bank of New York Mellon for managing our reserves. That is always the case. To the extent that does represent a benefit, from a regulatory point of view, I think you can't deny that there is some benefit in having those big recognized brands. But other than that, there's really not much more. Like, at the end of the day, we are only seeing, from a good point of view, vantage point from our regulator partners, to the extent that we're actually doing the work that they expect us to do, right? We're actually abiding to the laws and regulations. We're actually reporting what we do in a transparent way. We're taking care of consumer protection. Like, those are the things that actually matter.
Right. So my takeaway from why USDC did not depeg compared to other stablecoins during the Black Swan is because you're fully collateralized instead of USDT, which is partially collateralized, like the Federal Reserve.
Well, I will not enter into whether USDT is fully or partially collateralized, but I think as I said, yes, definitely we are fully collateralized, and that plays a big role. But I think it's also the quality of your systems. It's also the quality and the level of automation. As I said, we don't actually bolster and talk about these numbers a lot, because we think that they are not newsworthy. But just to give you some ideas, right? Last year, we redeemed north of $60 billion for our customers. And sometimes people get confused, like, oh, how do you mean you redeemed $60 billion? You didn't even have that in supply, right? But I'm talking about the amalgamation of all the quantity of dollars redeemed that we had in the year. It was over $60 billion. Earlier this year, when there were very hard market movements, right? So when Terra, when USD depegged, and we had all those things, we redeemed north of $10 billion in a week. And our systems did not sweat. They didn't blink, and we didn't have to ask anybody for any help in liquidity, because that's how we design our systems for, right? I think anybody claiming that, but look at us, we did great too. It's trying to attract attention to something that should just be the way that these constructs work.
Got it. So I'm going to take some audience questions. Sisla Abhishek asks, hi team, great talk. If compliant, can Cosmos SDK based chains request to mint USDC and receive them via the USDC chain? Is the USDC chain secured by the Cosmos Hub via ICS?
Yes, there is a future. There's a future where that asset issuance chain will be secured by ICS. That's correct. Yeah. That's the design path that we have chosen. Yeah.
To the first part of the question, I believe he's asking whether or not app chains that are, let's say, interchain accounts enabled with the general asset issuance chain where USDC is hosted, are they going to be able to programmatically mint USDC? I think that's your question, right, Sisla?
Yeah, it sounds like that is the case. Well, it's tricky for me to think about how that would be done programmatically, because you effectively need like a swap of dollars for USDC for that to happen. So I might be misunderstanding the question, but the way that I think liquidity can be obtained by another chain is by generating the demand, right? And I think on the end user side, if there is some entity, some user that is demanding USDC for some use case that they have, the idea is that because you will have like a good and streamlined path from dollars to USDC natively on Cosmos, that can be IBC'd somewhere else, that demand will be supplied by somebody, and will be supplied very efficiently.
Yeah, what's most likely going to happen is that The on-ramps like Cato are going to offer the fiat to USDC exchange, but once it's in the interchain network, all an app chain needs to do is speak interchain accounts or have a Cosmos smart contract on both sides, and then all it does is transfer the USDC via IBC to the other chain, like via a mint and burn mechanism. Yeah, there wouldn't be any additional injection of fiat for this to happen. That's yeah.
That is correct, and even just so people understand how these things usually work. Even a company like Cato, they would have, they can't mint and redeem USDC directly. They operate more as a distributor, right? So their construct is likely to be one where they have a bit of a stock of native Cosmos USDC that they can supply when people buy that stock with fiat. Then.
Got it. Okay, so that seems to be all the questions that we have from the audience. Unless, well, okay, there's one final one. Sisla also asks, wondering if USDC on Cosmos is any different from USDC on Ethereum.
Yeah, good question. I don't know. Maybe you can do a lot of different things with it, but from a quality property point of view, we always strive to make sure that these assets behave exactly the same way. So all of the behaviors, all of the functions that we have on USDC as a canonical asset, we have maintained parity in all the chains that we have issued so far, and we intend to do the same for Cosmos. So yes, they should behave exactly the same.
Yeah. Technically, they are non-fungible. They're distinct from each other. However, in a world when we have IBC for Ethereum chains, and we could just abstract away the bridge between the two, then that's when we're going to be able to have true interchain composability. And then the two different assets are no longer going to be materially different. And then we'll achieve greater fungibility in that case. Okay, that's excellent. I hope everyone that's been tuning in live has learned something. Anyone that's tuning in later, post live stream, has learned something. And Joao, thank you so much for your insights and sharing everything in a matter-of-fact manner. And yeah, just very excited about USDC coming to Cosmos. I think Cosmos has been on an up and up trajectory. So this landing in Cosmos is a strong bullish indicator, I would say.
I agree. Yeah. We're super excited. It's been a long time coming, and we're super excited to hopefully now in just a few months to be able to bring this to the ecosystem.
Yeah, it really has been a long time coming, and glad we're finally here. All right. Thank you to all our listeners for tuning in right now. If you're not subscribed to our channel already, please do subscribe and like the content so that we share it far and wide, share the alpha with your friends so that you can be best prepared for the next bull market. I stream podcasts every single Thursday, either in pre-recordings or live streams. So just hit the notification button so that you never miss an episode, so that you never miss the alpha. Thank you so much for tuning in. Bye, guys.